session.
This meeting is being recorded.
This session is one of the series of sessions for WIN India. So Women in IFA, we are delighted to invite you for this exclusive webinar, which we are in which we are focusing on two very important aspects which have come out of Budget 2022. And those two aspects are, of course, taxation of the VDAs, or the virtual digital assets, and tax controversy management. We will be holding, similar webinars over the course of the year. So request, many people to join us to make, the WIN chapter a little bit more successful in India. As you may be aware, the Women of IFA network, it represents a lot of professional women who are working in international tax. Our objective is to encourage participation of women in IFA's structure and in IFA's, IFA India's chapter. So with that, I think I'll just give a brief introduction of the people who we have on the panel. We have with us Payaswini Upadhyay. She's the senior editor of Law and Policy at Bloomberg Quint. I don't think she needs much of an introduction. But she spent, more than 13 years in business journalism, and she is very well known in covering, tax and policy and legal matters as part of her stint at Bloomberg Quint. She is going to be moderating this panel. Along with her, we have Gauri Gokhale. She heads the IP and the tech practice at Nishit Desai Associates. She's also, she's been named in several legal directories, including in the Hall of Fame. We also have Karishma Fatalfekar. She's a partner and the tax controversy management leader at Deloitte. She basically, her expertise is in tax litigation and transfer pricing. And she's going to be talking a lot about, what we can expect from the budget with respect to tax controversy management. She's also the co-WIN rep India. We would also really like to welcome Yuri Matsubara from Meiji University. We are glad that Yuri is able to join us from Japan. She's a professor of tax at Meiji University, and she's also the co-WIN rep of Japan. And just my brief introduction, I lead the international tax practice at Nishit Desai Associates, and I'm also, the co-WIN rep from India. So with that brief introduction, Payaswini, let me just hand it over to you, to take this session forward. Thank you. Payaswini, you're on mute.
Yeah. 2 years into COVID, we've still not learned this. Thank you, everyone, for joining us here on the panel, and to all the panelists for making time on a public holiday in India. But from just a sort of topic perspective, for a tax story to continue make headlines 1 month after the union budget has been pronounced, it's quite something. Stories die very quickly. How ever important or of national importance they are, but the virtual digital asset taxation is continuing to make headlines here in India, and I don't think anybody, including this panel, can be of with 100% certainty give answers to questions or clarifications that are coming by way of I think inputs from investors or exchanges, or foreign nationals who have some interest in this market. But the attempt here on this panel would be that people who have now spent over a month, looking at the fine print of this proposal or the clauses, will try their best to sort of decrypt some of these questions and queries, and towards the end of this session, and even during the session, if you feel that there is a question that you need to ask any of the panelists, please feel free to type it out in our chat box. I'll start with you, Gauri, and it's I don't know why it made such a furore, because there are already certain concepts in the income tax law that will give you the answer on whether just because an asset, I'm not even sure I can call it an asset because that's not how the income tax law sort of proposes it to be. Uh, the legality of, whether it is bitcoins, whether it is Ethereum, whether it is NFTs, sort of suddenly made headlines in the sense that, hey, look, just because this tax has come in, does it mean that all this universe of digital assets is now legal? uh, I would think that the answer is no, but would you like to sort of elaborate on the why?
Sure. Thanks, Paraswini, and thanks for giving that disclaimer in the beginning that we are still trying to find the answers, because the more we read, the more we sort of get confused all the time, with all the tax nuances that apply to all the new technologies. So you're right. I agree with you. I mean, for example, just keeping this aside, even gambling is illegal in the country, right? In several states, but you still have a tax that gets applicable, right? So only because something is being taxed does not necessarily mean the legality has been approved of that particular transaction, right? That's a clear example with gambling. But on the just because so that's something. Even if you hear the FM, right, when she was asked this question, she said whether legal or not, let's keep that aside. When there are so many transactions occurring, can I just ignore that and not tax that particular transaction, right? So the legality, I'll just take a half a minute. The legality is still being debated at the government level. As you know, the Reserve Bank of India had several years back brought in a circular to say that banks should not support any transactions for crypto. However, I'm glad, in fact, NDA was a part of that litigation before the Supreme Court, that ban was set aside. And so now today, at least under the current law, there is no illegality. Let me put it this way. Now we will need to wait and watch. There was a recommendation for making it illegal, but we understand that then the winds may be flowing the other way, and there may be some regulation, hopefully, but not illegality per se, is what we are hoping. So let's see. At least this is one positive response to say that yes, it is being taxed. So if I hope it is not banned and the government stops actually the tax budget that they may have put aside into so far as this asset is concerned.
Yeah, so look, Gauri, I mean, the way everybody's seeing it and the way I think the fair way to see it is this is just the first step. And I'm sure that we will see an independent statute, governing this space. And meanwhile, as the government figures out the how and why and does a consultative process with the stakeholders, I mean, they can't let go of the revenue. And also figure out the kind of transactions that are happening in the market, and hence some of the TDS related provisions, which we will come to later in the conversation. Parul, I think at this point it will be interesting to understand from you, for the benefit of our viewers, the kind of transactions that are happening in the market, the different entities that are sort of involved in the process. Could you detail a little bit on the commercial side? What do some of these transactions look like?
Yeah, sure, Payasmi. So, there are transactions which happen privately between individuals, which are more like, transaction between two individuals. But the more common transaction, that happens is between, which takes place on a crypto exchange. And that's getting something exceedingly popular. That's also one of the reasons why, in the bill, the taxation of the crypto assets has been proposed, or the virtual digital assets has been proposed. The whole intention is also to try to track some of these transactions and to figure out how the flow of money and the transaction is taking place. Maybe personally, what I can do is I can quickly share a slide which can probably give some sort of inkling as to how some of these transactions happen, specifically on a crypto exchange. So what will primarily happen is that there will be a crypto exchange which will work more like a marketplace kind of a model. Um, Individuals, and here I'm restricting my discussion to individuals. Individuals may buy or sell cryptocurrencies, or tokens through this exchange. Now, the manner in which the transaction happens is, could be different depending on the model which is followed by many of these crypto exchanges. But generally, what would happen is that there would be a payment which would be made from India if there is an Indian resident purchaser. The payment could be made for purchase of the crypto asset, or it could also be, the transaction could also be a crypto to crypto exchange. The issue that also arises here is that sometimes the payments which go through and the crypto which is delivered on account of the transaction would be kept in a wallet, and that wallet is, there is no situs as such of that wallet. One can't really say whether that wallet is in India, it's outside India, but it's maintained in a wallet, in a server, somewhere on the cloud, and that's how the transaction would happen. The person who's transacting on the exchange would not even know who the person is transacting against. So, for example, Payaswini, both of us are transacting on this crypto exchange. I wouldn't know that I'm buying or selling to you. Of course, it's possible for the crypto exchange to to maintain detailed information, but it's really very difficult from a practical perspective. The money flow may or may not happen through the crypto exchange, but generally, the crypto exchange would maintain a commission for this type of a model. There are also various models by way of which, for example, if you were to sign up with a particular crypto exchange, they may possibly issue promotional tokens or, probably a part of a coin free of charge, just to incentivize you from, joining that crypto exchange and, dealing with currencies. I think there is a lot of, the commercial of bit of it cannot really be spoken in isolation with a lot of foreign exchange control issues, because are you making the payment in Indian rupees, but where are you getting the Bitcoin from? Are you even allowed to do that? Where is the where is the token or the currency really stored? So that poses a lot of question. But primarily, when we talk about the manner in which the transaction is done on a very basic philosophy, this is the way that the transaction takes place.
Karishma, coming here on, the idea is that to start with, the government should know the volume of transactions, what kind of entities are making these transactions, because it works slightly differently than how conventionally we understand the securities market or the commodities market, because in a lot of these cases, the exchanges themselves are participants in this market. With that intent, and I think is why that we have now a really broad definition of virtual digital assets, and we'll come to the unintended consequences of such a sort of wide definition in just a bit. But those of our participants who have not probably understood the definition per se, would you want to weigh in on the kind of transactions or the kind of assets that the government is intending to track, trace, and raise revenue from?
We lost Karishma? Or?
Gauri, you want to take that question up while Karishma maybe joins us back? Maybe
Sure. So let me just quickly deal with the definition and take the other question that you mentioned about unintended consequence, right? So prima facie, in my view, the definition is very broad, though one can always have a legal argument about how we interpret that legal definition. But the intention seems to be more, controlling the crypto assets than just the wider definition that currently reads. Because in the current set of definition, one can interpret even, for example, loyalty points or credit card points, etc., that may get issued. One can argue that those also get included in the definition, right? But in our mind, that is not the intention, and therefore, I hope in the actual fine print that comes out, or maybe even CBDT clarifies this position, right? But just from a definition perspective, it is any information, code, number, or token generated through cryptographic means or otherwise. Now this or otherwise is what is likely to create problem. One can argue that it has to be a generated in the similar manner as cryptographic manner, and therefore the definition is limited. That could be one argument for the intention. And then there is another aspect of it. It says that it has to demonstrate a store value, right? That is a value that is stored. But it also adds some element on the promise, that there is a promise that there will be value. And that is where, again, because there are certain ICOs and wherever, there are white papers where there is a promise. So that point in time, there is no value ascertained for that particular, sort of a digital currency. So that is the other unintended, probably consequence of enhanced, definition. And then it also talks about the inclusion of NFTs. Now, whether and that NFT as will be prescribed or as will be determined later, right? So we feel that the current definition is pretty broad, and it can be narrowed to say that the assets or the tokens which are handled via blockchain or transacted or recorded over blockchain, that is the limited ambit, in my view, should be looked into. And NFT doesn't necessarily separately need to be defined, in my view, because NFT is merely, you're basically attaching something to the digital, IP or a physical, asset. And there need not be a separately defined. So you should not have double, whammy in terms of your also, taxing the underlying asset, and you're also taxing the certified asset, right? To put it very simply. So these are the 2-3 unintended consequences of the definition. And I know you had a question for Karishma in terms of tracking, so maybe I can leave her with that question.
No problem. Parul, let me come to you with, the definition per se. Look, this is an evolving universe that you as practitioners also on a day-to-day basis, I'm sure, come across, a new shape and form that an asset takes, or the commercials of it. And which is why perhaps that the government has kept this definition this broad. Um, to allay some of the fears that Gauri has sort of articulated, would it be better for the government to maybe add an explanation rather than narrow the definition? Because the moment the risk with narrowing the definition is that people are quite creative out there, right? So there could be a new sort of shape and form that this asset could take, and the revenue could then be grappling with how do we now tax it. Do we have a proposal for the government to say that, hey, look, via this explanation, maybe these unintended consequences could be taken care of? Or would we rather see the definition actually get amended?
Yeah. So personally, what we have been doing in our representations to the government is that, and of course, we've also picked up some definitions which have been used in other countries. And when we were thinking about it, we were actually thinking about what is the government's concern and what are they actually trying to tap. Of course, the definition is as wide as it can get because there are new business models that may come up. There will be new, new kind of tokens or assets that may get created as we move more, into the tech world. So therefore, the definition is really wide. What we have been recommending to the government is that at least there has to be some connection with these assets being generated. As a principle to, out of a distributed ledger technology. And because ultimately, whether we look at, the tokens which are issued on top of a blockchain technology, or we look at crypto assets, there is an underlying distributed ledger technology. And that's what you should be taken as a base. That's primarily what our recommendation has been on this.
Okay. I know Gauri mentioned this, that the why of the NFT being defined separately is not clear. But do you have any thoughts around that?
So why NFT has not really been defined, and actually, in fact, if you look at the broader definition of virtual digital asset, in some sense, actually, it already gets covered. And maybe they are looking at some sort of more specific definition, which can cover NFTs in general. But that's where, the broad part is that it actually gets covered. Maybe it was more to make it even abundantly clear that NFTs are covered, but we believe that the definition actually covers it. In fact, the definition should be narrowed with respect to the distributed, ledger technology, and then the NFT definition can actually be plugged in.
All right. Okay. We also have the benefit of the Japanese perspective, where maybe we have seen, the authorities there a little ahead in terms of taxing these transactions. Yuri, you want to give us a sort of a lowdown on how the authorities there or how the government there has approached the taxation of these sort of transactions?
Okay, first of all, thank you so much for your kind invitation. And my answer is because currently Japanese tax authority does not so explain so explicitly how they treat such kind of NFT transactions. They simply concentrated on only the cryptocurrency transaction because apart from it's a bit different between India and your country, India and Japan, because Japan has from the very beginning, so relatively positive point of view we have about cryptocurrency. Not only so, but they do not. That's why the government did not so strictly prohibit it, but more softer way, they try to control it. That's why, at the very beginning, so not a tax agency, national tax agency, but financial service agency, another section of the government committed of this kind of topics. That's why, and so firstly, 2 years ago, so the NTA has a guidance expressed as a kind of soft law. They should tax not so 30%, so of such a kind of high tax rate, but in accordance in the part of the income normal income tax scheduler system. But we have currently 10 different scheduler system scheduler items. That the crypto assets, cryptocurrency transaction are categorized as the most strict actually. So the so-called miscellaneous income, you may not offset other type of incomes, etc. And you may not carry forward, carry back in the different accounting, fiscal years, etc., etc. That's why I think the government tried to grasp very now efficiently, should I say. They don't have any new regulation. However, within the old original, in our income tax codes, they try to tax cryptocurrency, but indeed, otherwise, if you run the kind of cryptocurrency exchange market, you should be subject to the business income, so-called business. In such a case, you may deduct blah blah blah. However, I think the number of taxpayer which are covered of such kind of business income is not so really. I guess less than 10 or no, or I think in between 20, I guess, because so I guess. And regarding VDA, is I think Indian people is a much you know much better than I guess, because for us it's still in progress, I guess. So that's why. But we are now discussing not only tax law expertise, but also patent law or security laws, security law expertise together. How should we define this kind of new assets, no, VDA, and especially some of my friends pointed out he's a specialist of security transaction law, commercial law professor. We should notice about also taking into account about the original copyright holder, etc., etc. So
Yeah.
that's why. Yeah, that's it.
Okay. Okay.
Sorry,
Thanks,
I
Yuri,
talk too
for that.
much.
No, that's fine. Thank you, Yuri, for that perspective. Gauri, I wanted to quickly come to you before I move to why the government chose to bring it as not an asset, not classifies it with business income, but they've just said income arising from this asset. And I'll come to Parul on how this income is characterized, etc. But the one big question, Gauri, that we kept getting once these proposals were out, how's the government going to trace these transactions? And talk about here a little bit on the TDS provisions as well. But like Parul mentioned in that flow chart, she said that a lot of times I don't even know who's the buyer or the seller at the other end. So talk a little bit about how these transactions are going to get tracked. Will we continue to see sort of some of these transactions as the CBDT chairman put in an interview to Bloomberg Quint, in the gray economy? And how will the TDS provisions really work?
Sure. So personally, I will look at it from two perspectives, right? If we really believe that this is something we want to sort of continue as a regime, right? So obviously, because today, though it is not known, I mean, at least we believe it is not illegal, because of the grayness of the system, there are still some things which may be happening under the radar, right? Which are not to be traced in the system, right? The moment you make it legal, more likely than not, most of these will come in the regular market, right? So obviously there will be certain transactions which will be sort of under the radar, which are not private transactions. But when there are not transactions on the exchanges, right, that is where that exchanges are being examined by several regulators, left, right, and center. So somewhere which is in the ecosystem, I think those are likely to be more transparent, and that is where I feel that the moment you make certain things legal, or call out to be legal, then the transparency increases and the tracking also definitely increases, right? I give
Right.
the same example like gaming, because I do a lot in the gaming sector and these are used in the gaming sector as well, right? What happens is when in the in the state where it is legal, everything you will see transparently. Where it is not, so many cash transactions happen on the side, right? So therefore, from a tracking perspective, I believe that at least when on the exchanging, it will be easier. When it is private, it's going to be difficult. And I'm sure, Karishma and Parul, they have more, visibility on that, how the tax officers would go after some of these transactions. But that's a simple way I look at it.
Sure, that's fair to say, because exchanges is something that is an entity which is easier to go after, easier to regulate, easier to ask information from versus one-on-one transactions. So I think the starting point is you at least make regulations that can govern the big fish, and then we will see how the small fish needs to be catched.
Right.
Parul, come in here if you see issues with these transactions being traced, and also how the income will be characterized by way of selling, transfer, exchange of these virtual digital assets.
Yeah, sure, Payasmi. So income characterization is actually, it's an issue more from a non-resident perspective. What the proposal, the budget has done is that they've come out with a special rate, which is a 30% tax rate, the highest marginal tax rate. And the tax is going to be on the income which is earned on sale of the asset, and the only deduction which the person will be able to claim will be with respect to the cost of acquisition. The head of the income under which this actually gets taxed is not specified, as compared to winnings from lotteries or racehorses or crossword puzzles, where this income is specifically characterized as income from other sources. Now, it's possible that when the income tax return schema comes out, this may come under the same breath as winnings from crossword puzzles, etc. But that does not necessarily mean that this is characterized as income from other sources. Like I said, for a resident person who is earning the income, the tax rate is 30%. So, and the taxation manner is provided for. So therefore, whatever, whether it falls under cap gains or business income or other income, it doesn't really matter that much. For a non-resident, purchaser or a seller rather, for a non-resident seller who's transacting on an Indian crypto exchange, this could lead to certain very interesting questions. One is on the characterization, because the characterization would then determine whether there is a relief that can be obtained under a double tax avoidance treaty with India. Secondly, the characterization of that income would also depend on the manner of taxation. For example, there is a lot of debate on what exactly is is a crypto asset. I'm talking more with respect to crypto rather than other virtual digital assets. But what exactly is this? Is it a security? Is it a property other than a security? What exactly is it? The situs of this is again a question mark, because at least with respect to shares and other securities, the situs of an Indian share or a share issued by an Indian company is considered to be in India. But more so for assets like these, if we read international tax commentary, the situs would be where the owner is based. But if the transaction is happening in India, then the income does arise in India, and therefore, there would be a tax impact in India. That's where the play of the double tax treaty would come in. There would also be this question of, are you receiving this money in India for India to levy a tax? Because like I explained initially, it could be received in a wallet, and where that wallet is, that's anybody's guess. So these are some of the issues, and combined with the TDS issue, where the person who's responsible for withholding the tax doesn't even know the status of the person to whom they're making the payment. I think it's going to be quite a bit of a mess.
So immediately, let's say, all the clarifications that you're hoping for, they don't sort of come in, once in the final version that we see the Parliament, approving. What are the sort of questions, Parul and Gauri, either of you can take this up, have the exchanges come to you with? Because the expectation is that between the buyer and the seller, the TDS should be taken care of. Could there be a situation where the exchanges might be asked to deduct this TDS or act as that intermediary who will deposit then this tax with the government? Could either of you sort of give some clarity on this front?
Sure. So, I can just start off, and Gauri, maybe you can give your perspective. It also depends on the model which is being followed by these exchanges. The TDS provision says that the person who's responsible for making the payment has to withhold the tax. Now, just talking about a bank, many people's salaries come through a bank. That doesn't mean that the bank is the person who's responsible for making the payment. It's the employer at the end of the day. In this case, if if the crypto exchange is taking responsibility for collection, and they are they are actually maintaining the payment system within themselves, they are netting off the proceeds, then it's possible the tax authorities may say that you are the ones who are responsible for making the payment, whereas technically speaking, the transaction is actually between the buyer and the seller, and it's actually the purchaser who has to make the payment. But because it's going to be so difficult to monitor this, and so impractical for a purchaser to really figure out the status and the person to whom with whom the transaction is being carried out, possibly the first port of call could be the exchange here.
Yeah, Gauri, would you think that some of the business models that these exchanges were sort of working on, those will need to be changed? Are some of those queries coming your way since these budget proposals have come in?
Yeah, sure. So we are still, as you rightly said, we are still figuring out the overall impact, because the wording that has been given, I'll draw an analogy with the e-commerce platforms where there was a TDS imposed, a couple of years back. There was a clear provision that was given on the platforms, right? Such language, is obviously absent in the current wording. Right. So that is one sort of distinction.
Have you been able to, sorry to interrupt, have you been able to put a finger on why not just say that where the transactions are happening on the exchange is supposed to deduct the TDS? Can they not sort of put that in?
Yeah, so that, as Parul said, because there are, the flow of funds, it may differ in different business models, right? Then there are flow of funds even from India to abroad and the other way around. So there are quite a few, unfortunately, anomalies. Even the point that was made earlier, that there is a transaction where there is a crypto versus crypto transaction, right? So how are you then even deducting that, because there is no consideration being paid for which is in fiat currency, right? So honestly, all of us are still sort of trying to figure out, and our focus today is to how do we, inform the government that please look into all these issues, rather than advising, because we are still hoping that we get this clarity, before we actually get into the modeling, of the entire framework. But you're right that some exchanges may have to revisit the manner in which, and the terms and conditions and the manner in which the flow of funds are happening.
Sure. Okay. I mean, I think we can continue to talk up on this topic for hours at end, but we do need to sort of move on to the next broad topic of this conversation, which is to do with the litigation management, broadly, as the government put it in the memorandum to the finance bill. Karishma, we've let you be quiet for quite a while, but coming here on the repetitive appeals provision that the government is hoping to introduce, something like that already exists for the taxpayer. Let's say in one assessment year, there's a question of law that has arisen for me, and in another assessment, and that's being litigated in courts. For another assessment year, if the same question comes up, the department can decide, hey, look, let the judiciary decide on the first assessment year's question, and then we'll of course apply the same principles for another assessment year. Now, what the government is proposing is that apply this across taxpayers, and we'll come to the minutiae of it. But can you first help us understand how the provision has worked out so far within the sort of same taxpayers universe, and then we can come to the specific proposals going forward, inter say between taxpayers.
Right. Am I audible?
Yes, you are.
Okay. Right. So, Payaswini, you're right. We already have 158 AA, right, which talks about department not having to file an appeal where the issue involved in the case of the same assessee is there. And practically, if you see this, right, this has not really been implemented or leveraged upon. And the primary reason I would say for this is because one, the department has had an additional burden, right? Because the way the entire section is worded, the department, as compared to going through that process versus simply filing an appeal, the departmental officers have really not chosen to actually implement that in substance. Now, again, if you look at the application that is made under 158 AA, the responsibilities are quite onerous on the department. So, for example, there are approvals required of the senior officers. Then they need to keep a track on the outcome of the main appeal. And then what happens is that if the issue is decided, then they would, really be required to take a call, on whether to file an appeal for the years in which application has been made under 158A or not. So generally, we have seen that the tendency has been on ground that, instead of going through this entire process, just simply file an appeal, and that makes it much easier, So practically, if you ask me, on ground, really, it's not worked at all.
Yeah, and that's why I was wondering that, now this new proposal of introducing section 158AB, to then say that, hey, look, if something, and I'm just naming these names for, example, for as an illustration, that if the TCS is fighting on a question of law and that's pending, and similar question has arisen for Infosys, let us wait for the outcome for TCS and then maybe, litigate Infosys. That's the sort of proposal broadly, Karishma, if I've understood it correctly, right?
That's right. So in the new proposal, it is, if it's a common question of law, right? Like you had the issue of software royalty issue, your AMP issue is being currently pending at the Supreme Court on transfer pricing intangibles, right? That whether it is an international transaction or not. Now, if such issues are decided, for example, in favor of the taxpayer, then really there is no question or meaning of litigating, right? Because if the Supreme Court or the High Court holds that, really there is the transaction, for example, as I'm saying, in case of marketing intangibles, they say that the AMP is not an international transaction, then irrespective of the facts of the case, the legality of the issue is determined, and therefore it doesn't make any sense for either the department to spend time or the assessee to spend time. And that is the whole intent of this 158 AB, which is introduced, that not only in your own case, but nowadays you're dealing with such common questions of law, that why waste everybody's time and actually going out and litigating, right? So that is the real intent of the 158 AB. But again, the nuances are different.
Yeah, that's where I was coming to. Could you break it down for us? Let's say, the assessing officer picks up a case and it goes through the appellate process within the tax department until CIT appeals. That's where they realize, hey, look, there is another taxpayer in whose assessment this question is pending before either the appellate tribunal or the High Court or the Supreme Court. Is there where the tax department stops? Could you sort of take us through how the appeal process will work?
Yeah, see, there are 4 steps in this entire new section, if I were to break it down. The first step is, the department collegium. There is a collegium concept which has been introduced in 158 AB as compared to in 158 AA, which was more a commissioner concept, right? So the department collegium in one,
right?
That's right. That's right.
Yeah.
So commissioners collegium, but it's like not just one commissioner deciding whether to appeal or no. Here it's, the department collegium would actually identify if a question of law in case of the assessee, whether it is arising from the CIT order or even the tribunal order, is identical with a question of law which is pending before the High Court or the Supreme Court. Now, this can be in 2 cases in step 1. Either it can be in the case of the same assessee for any other assessment year, or it can be in the case of any other assessee for any assessment year. So basically, the question of law has to be in step 1 pending before CIT or tribunal, and the question of law to be answered has to be adjudicated by the High Court or Supreme Court. So that's the first thing that the department collegium would identify. Then the second step to it is that once the department collegium identifies this, the collegium will inform the principal commissioner or the commissioner to not file an appeal, at the stage before the tribunal or the High Court. So that is the second step of the process. Then the third step of the process will be that the principal commissioner or the commissioner, would direct the assessing officer to go and obtain the assessee's acceptance. Now, this is a new thing which is introduced where they have said that you also need to obtain the assessee's acceptance, and only if the assessee accepts that this is the same question of law, then only can you choose to not go into appeal. So, and if, so basically what happens in the third step is that the principal commissioner and commissioner will direct the AO to obtain the assessee's acceptance. And if received, if within 60 days, right, or when it is tribunal or High Court 120 days, then it would file based on the decision that whether an appeal needs to be filed or not. So if the assessee's acceptance is not received, then an appeal will be filed in the ordinary course. So that is step 3. And then the step 4 in this process, Payaswini, will be that appeals in such cases would be filed only if the final decision on the question of law really is not in sync with the decision of the CIT or tribunal. So this again has to be filed within 60 days from the date of communication of the order. So essentially, if you really look at the summary of it, frankly speaking, assessee's approval, it was actually, I'm wrong, let me correct. In 158 AA also, assessee's approval was required. But so basically, the only difference I would say between these 2 sections is that, the AA is more a commissioner, which has been replaced by a collegium. And you can also defer it in case of a similar question of law, which is relevant in other assessees, not necessarily in your own case. So these are the two primary distinguishing factors. But practically, I see this again, 158 AB also by Sweeney. I see it very difficult for an assessee to really go ahead and accept, right? Because
I was going to ask that practically you are gambling your sort of fate and, hoping that that other case goes in the favor of the taxpayer, and then those principles, are applied to you as well. Do you see a lot of assessees agreeing to this strategy?
I don't think so many assessees would want to gamble their fate on somebody else's appeal, frankly, by Sweeney, because unless it's a issue like a reassessment order that we are seeing currently, right? In the High Court's hearing a whole lot of writ petitions, those kind of issues where the lead cases are being argued by senior counsels, and that, okay, the legality of the issue will be what it will be for all the cases. It's not going to be different. But in majority of the cases in tax, we have seen the litigation is on international tax and transfer pricing, and those are very fact driven. So let's assume a situation if the assessee accepts, right, and tomorrow if the case goes against, then it will be very difficult for the assessee to make out a different case. Then he can't put down and say that, look here, now this is different in terms of facts, etc. Because in high courts and all, facts will not work, So I think it will be a very skeptical thing, and there can be better ways to avoid litigation, frankly.
I was just going to come to this, Karishma, that look, I think in theory, this is a good proposal, right? That the government is saying that why should 100 people aggrieved by the same question of law go and litigate individually? Let one guy's case get decided, and we'll, apply the same principles, hopefully, to the rest 99. Is there a better way to do this, where we also get the buy-in of the assessees and taxpayers?
Yeah, absolutely. I think we need to become a fairly less litigative society, right? I mean, if I wouldn't only blame the government, I think it's both ways, right? I mean, everywhere, we're trying to take advantage of the tax loopholes, and therefore there is that initial mistrust between the department and the taxpayer. So that's the first fundamental change in mindset that needs to happen both at the taxpayer level and at the government level. Having said that, if the government wants to practically come forward and, say that, okay, how should we go about doing this? There are very live cases in the West, right? Where we're seeing that you pick up a particular, the way we do assessments, we pick up a case for scrutiny almost every year or every alternate year for the same assessee for the same set of issues. How does it, what is it that we are achieving? Asking him the same set of questions, going through the same set of scrutiny every single year. You pick up a taxpayer, look at his case for 5 to 7 years, right? And you assess him, and so that is on the way of how you can approach taxpayer scrutiny, right? Rather than having volume, focus on quality of the taxpayers you want to pick up. And now the government is having enough data, analytics and stuff to kind of narrow down what are the risk parameters and pick up those assessees. And then you have the other side, let's assume you feel not assessees, but there are certain transactions which are very, you can say, from a risk standpoint, averse to tax evasion, right? Yeah. Then maybe you can pick up some very high 3-4 taxpayers, see the fate of that issue, right? As to how is it going in appeals, and then decide and pick up other cases, other assessees. I mean, there is no point in, putting your entire workforce to play to sit and scrutinize every single assessee, every transaction, because that's not going to help. I mean, that's only going to increase the burden of the courts and high court. So sure. I think we need to be a bit more pragmatic in our scrutiny approach. And as I said, also the first mindset approach of both the taxpayer and the department, that look here, now the tax rates are pretty reasonable, let's just go ahead, pay tax. Let's not look at every single opportunity of tax planning, which also creates mistrust, So both ways, I think.
Yeah, and I think consultants and experts, you're like yourself, can play a massive role in that. Yuri, please come in here to give us a perspective on how litigation management of the shape and form that the government is trying to curtail here in India is being managed in your jurisdiction.
Okay, thanks. Frankly speaking, from my observation, I think the Indian people would like to go to the court, no? The tax petition, to file the petition, but it was a big contrast. In Japan, most of the Japanese taxpayer would like to avoid the litigation. That's why, so they try to finish before the pre-court level. This is that's why, so, and we have, even though Japan is not a part of the UK origin, so-called countries, however, but that's why, so we simply so follow the Franco-German style in 19th century. That's why, so we do not, however, we have as a pre-court system, a tax tribunal system, like same in UK, I guess. And then, so if that's why, so the merit of the why, so the taxpayer would like to go to the tax tribunal first is it's free of charge, and that's open closed session. That's why, so they can, so also, they don't care about their reputation risk first, no? And the problem is not all the judges at the tax tribunal, they are professionals. Somebody is a layman, somebody comes from the National Tax Agency. Even though they strictly so divide the role, however, it's a bit so difficult to say whether the decision is really 100% independent or not. But another reason for that is the system still exists is because in Japan, there are less tax professionals, including international tax professions, in comparison with uh, other other company law or corporate or patent lawyer. That's why, so we need such kind of so system still now. And another merit from the taxpayers side is if even though the tax tribunal judge decided in favor of taxpayer, the tax authority cannot go to file the petition to the normal court. It's finished.
Yeah.
Actually, so yeah, and that's why, so from the perspective of the tax to protect the taxpayers' right, I think it still works. And
So here in India, until the Supreme Court sort of gives a stamp in either favor, I think most large cases, the
yeah.
default is you appeal to the next level.
Yes, and even for the first instance level, the reason why the tax tribunal was established more than 50 or 40 years ago, or almost 50 years ago in Japan, is at that time there are so many small tax cases in Japan. It's a kind of a tax revolt. That's why it's a worldwide movement, I guess. That's why the government decided to split the tax cases from the court.
Yeah.
And unluckily enough or unluckily enough, so normal court judges, they are professionals. They are not so good, plenty of knowledge of about the taxation law, unfortunately. Now it's not much better. But at that time, that's why in such a case, usually so taxpayer almost always lost the litigation. It's not so good. But anyway, as Karishma says, I think so recently, as a recent trend, is that in Japan is also we have several very important cases about in the field of the transfer pricing. Yeah, that's why. So we are very keen. We would like to know about the Indian experience very much. Thank you so much for your speech, Charisma. Yeah,
Sure.
that's it.
Yeah. So quite a few lessons there, of course, but non-litigious DNA is difficult to import. Karishma, the second sort of important change that has come in via the finance bill proposals is on the faceless assessments. And thankfully, the government has taken a cue from, what was happening in high courts across India. Maybe except one high court, most high courts ruled in favor of the taxpayer, whether it was on the principles of natural justice, whether it was on the process. Some of that process has gotten simplified. Personal hearings have been made mandatory if the taxpayer asks for it. Are there any residual concerns that continue to be sort of difficult in your assessment?
So, yes, I mean, faceless has been in kind of a concern, Paswani, if I were to say, frankly, in the name of faceless assessments, transparency and accountability, in my view, is getting lost. And despite various high court decisions, government has deleted the provisions which stated that faceless assessment orders passed in contravention of the scheme, right, mentioned in the section are honest in law. So it seems really that government is only protecting itself from the faulty execution of the faceless assessment scheme by
Yeah,
some
because
field
that
office.
has been deleted now or proposed to
Yeah,
be deleted now and retrospectively, if I'm not mistaken.
absolutely. I mean, that's a outcome of the high court decisions. But however, in this endeavor of the government, frankly, personally, the taxpayer will be the one who will really suffer the most. And in case of any grievance during a faceless assessment scheme, the taxpayer will again have to fight out in appellate courts and go through the entire appeal cycle. So. I think this really needs a bit of a thinking and not rushing into it, because and in a way it's good that the government has postponed the faceless for the DRP and the tribunals, right? Which was going to come out in 2022, and now that has been pushed to 2024. So my sense is government has also realized that, see, the intent and the objective is not wrong, I would say, because less interaction at the ground level, right? At the assessment level, the lesser the interaction, the better it is from being arbitrary, right? That's what we have seen. So, and then of course, these orders have been traveling up to the National Faceless Center, and there has been some bit of consistency. So there is a method to madness, and therefore, at the basic assessment level, I feel it's fine. But at the appeals level, there were a lot of challenges. Government then said, okay, video conferencing will be allowed. And then DRP and tribunal was going to be introduced, which government realized that it seems ambitious, and therefore let's just think through this
Yeah,
properly. And they've also pushed this to 2024.
yeah,
So, frankly, tribunals, I don't think should get faceless, because tribunal is like a quasi court, right? It's like a tax court. And I personally feel that being a lawyer, that the impact that you have in arguing a matter in a court versus you not knowing who you are going to argue the matter, it's a very different thing. So up to an appeal stage, CIT appeal stage, I think it's still fine. But there also, they should continue to give the option of, in very complex cases, assessee having the option to go in for a video conference or something. So but overall, I think interaction with the assessing officer, reducing that, and reduction of the arbitrariness in the approach, etc., is a good thing. So,
sure.
but we have been pioneers, I must say. We've taken the bold step. Not many countries have done that. So it's hats off, and government is also learning, right, from its mistake, and trying to learn, unlearn, relearn, right? So that's
Well,
good.
as long as that process is alive and they're not obstinate about it, and I think it's a good sign that both faceless appeals and faceless assessments in the last year, owing to representations from industry folks like yourself, the government has been listening, and those sort of changes and suggestions have been now incorporated, or at least proposed to be incorporated in the law. Before finally I move on to some of the questions that are coming in, and they largely continue to be on the virtual digital asset. Karishma, final sort of topic that I wanted to quickly touch upon is of reassessments. Some people are reading it to mean that, hey, look, all the good that came in via the Finance Bill 2020 and the amendments to the income tax law on the reassessment fronts has gotten diluted this year. Could you, for the benefit of our viewers, explain what the changes that the Finance Bill 2022 has proposed and also the implications of it?
Right. So I'm a little mindful of the time, Payaswini, because we're already on the top of the hour, but this is definitely a very relevant, issue, reassessments. We all know that when reassessments was happening prior to 2021, right? The general, it was very broad. It was at the discretion of the assessing officer, and there need to be a reason to believe. That was the whole, the whole funda around the reopening was reason to believe, and then it went right up to the Supreme Court, and Supreme Court really, said that there needs to be a process through which the reopening needs to happen. There needs to be a speaking order giving out the reasons to believe, and it laid out a process. And courts were actually squashing reopenings earlier on the basis of this process not being followed. So what 2021 reassessment provisions tried to do, which is the 148A, right? They tried to, in a way, incorporate what the Supreme Court said earlier, by saying that, okay, even before you issue the reassessment notice, you need to give an opportunity to the assessee, and you need to pass a speaking order on why it is reopened. The interesting part in 2021 that I had personally liked was that they had gone about and actually defined that what is the information, right, on the basis of which they can reopen. So information was very tightly defined. And information meant, something that would come out in a risk assessment or a CAG report. And it was very particular and restricted. Okay. Now, and of course, then the time limit was also reduced from 8 years to 6 years. But now in 2022, again, they've kind of, broadened it up, and, it's gone up to 10 years again, with a 50 lakhs limit, which is not a big thing, right? Income escaping 50 lakhs. And again, also, I think it's not only restricted to assets, but it's asset expenditure or any item in the P&L. So again, it's broadened the whole thing. So,
but is it not fair to say, Karishma, that the government or the tax authorities should get all the tools to be able to catch income that has escaped reassessment?
Yeah, meaning, yes, absolutely. I would say that the flow of information and also the correlation, right, between the information from various sources is incredibly increased due to digitization. And this definitely gives some basis for reassessment, no doubt, as compared to the earlier days, However, unfortunately, the way the law is currently drafted, right, it gives tremendous powers to the department, which is what I'm concerned should not be misused or abused, right? And of course, it's very premature to comment on this, I would say, aspect currently, because we'll have to see how it goes, and see also how reassessments are yet to be published, the data, etc. The parameters are published by CBDT, And if these parameters really have adequate checks and balances in itself, Payaswini, then, we may not be able to label the new provisions as in favor of the department. But however, if the CBDT does not really publicly announce these parameters, or if these parameters are again legally untenable, then taxpayers will again go to High Court and risk jurisdictions and get relief. So a lot depends really, I would say, on the way in which this is executed and implemented by the CBDT. And hopefully they have taken this into consideration, and they have taken into consideration also the taxpayers' concerns, hardships, etc., which are faced on account of reassessment. So I would like to think positive on it.
Yeah, here's hoping. Okay, Parul, I will give the final word to you, and I'll come to you with two questions that have come from some of the viewers who are tuned into this conversation. One is somebody's asked to sort of, if you can give a broad overview on how India's approach towards taxing crypto compares with some of the other jurisdictions. That is one question. And two is a slightly more relevant question in terms of how practically the income arising from such transactions should be calculated, the computation bit of it, where somebody is asked how the cost of acquisition will work.
And if I can sort of quickly take 30 seconds, at least from the conversation that Bloomberg Quinn did with the CBDT chairman, he was very sort of clear in his response to say that incidental charges like your gas fees, exchange fees, or brokerage fees should not be included in your cost of acquisitions. Your response on both these, Parul?
Sure, Pesman. So let's talk about the first question, which is about India's approach to, taxing these type of transactions. So India is clearly not the first country to introduce a sort of a crypto tax, and it's been there for some time. We have countries like Canada and US that have already implemented some sort of a crypto tax. Uh, Canada and US, as I understand, they still cover it within the ambit of capital gains, and they would probably have a special rate for taxation of transactions on cryptocurrencies. There are some exemptions and all which they give, but based on our research, personally, it doesn't seem that the broad framework which has been introduced in India with respect to the definition of virtual digital asset has been adopted by many countries. They've come out more like with a virtual, with a kind of a crypto tax where tax rate is 20%. And I've also, based on my research, I've seen mainly a tax rate of 20%, or even within the cap gains bracket, the higher tax rate within the cap gains bracket. I think where India is concerned, this is kind of tying in with with the discomfort around such transactions, and maybe by implementing this sort of a tax. I mean, if you look at it, ultimately, if there is a 30% tax which applies on a crypto transaction, and we've not even come to GST, but GST is a big issue on these transactions. If we talk about an 18% of GST applying on this, then 50% of the value just gets wiped out. So I think there is a bit of a thinking from an Indian perspective on how to, really treat these transactions and call them more about, more on the speculative side rather than put them within the main framework of, business income or capital gain income. I think there is also a thinking that there should not really be any tax treaty availability that should be claimed because, just the way that the law has been introduced. But we'll get to know more about, about this. On the second question on how do you really calculate, the income, again, I think there are two aspects there. One is the aspect which you rate, Paiswani, which is on with respect to the cost of acquisition. And can you really add incidental costs to the cost of acquisition? The other more important aspect is, is primarily going to be around valuation. And how do you really, when there is crypto to crypto exchange, how do you really value the crypto, whether it is for determination of the income or whether it is for applicability of Section 56 or, more so called as the gift tax in India. On the first part where we talk about cost of acquisition, so Indian law is very clear, that till the time the cost is not so inextricably linked to the purchase, you cannot really add it to the cost. So for example, if I were to look at shares, etc., it's more like broker fees, which has been paid for the share. But when we look at, exchange fees, where I have some sort of a membership or something, then it would become difficult for those costs to be added. I think also going by the intent of, that you don't get deductions for any expenses, you should just be able to take a deduction of the cost of acquisition. You cannot carry forward any of the losses, set it off against any other head, so on and so forth. I think what the government is really looking at is that if you paid 100 rupees for a particular crypto, and you've sold it for 1,000 rupees, then it's the 900 rupees on which you pay tax, and you don't really add anything there. On the valuation side, I think it's really more tricky. For valuation, if there is a crypto to crypto exchange, the TDS applies on both the purchaser and the seller, and one party is the purchaser as well as the seller. So on both the parties, the TDS will apply. How do you really determine the valuation for the purposes of deduction of tax? One aspect could be that, you pick up the rate which is existent on the crypto exchange, but that rate is also changing every, it could change every second as well. It's not like, it's not like a listed share where you pick up the trading price on a particular date. So that's one issue. The other issue is that with respect to Section 56, to determine whether you have received a digital asset at lower than its value. Currently, Rule 11 UA provides valuation rules for all types of assets, whether those are jewelry, paintings, art, etc. There is no specific rule right now, and maybe it will get introduced, as the time goes by. This will get introduced with respect, for the virtual data assets as well. But it'll be interesting to see how they introduce it, because like I said, the value could be differing from exchange to exchange, and it could change from second to second, and it's going to be slightly tricky. So I think people will have to take a more pragmatic approach, pick up the valuation on the exchange at that point in time, and go by it.
Okay. Do we have quick minute, Parul, to take one question that has come Karishma's way?
Yeah, sure, absolutely.
Karishma, somebody wants to know the fear of misuse and overuse of the new reassessment provision. I'm sure you can spend hours on it, but take a stab for a slightly shorter answer.
Right. Okay. So first of all, I would say there may not be really an intention to overuse or misuse, However, if I was to compare with a point, case in point, let's say of the execution, right, or the implementation of faceless scheme that we discussed, high courts across the country were burdened with repetitive, challenging assessment orders and jurisdictional errors, etc. Right. So what we saw in such a case, that the intention of faceless was perfect, it was very good, but there was faulty execution, and that resulted into undue hardship for the taxpayers, right? So even for reassessments, I think CBDT, and I mentioned that earlier, should tread cautiously and add and ensure that the parameters which they prescribe for selection of cases, right, for reassessment, they are just and fair. So if the CBDT really on a proactive basis comes out with these parameters and is transparently, communicated upfront proactively, then I think, it should not be a problem. Only then I would think they would really, the real intent of the keeping this reassessment fair, right, for the tax department also will serve its purpose. So let's go with that positive thought that that's what CBDT will do.
True. Actually, and Karishma, that holds true for sort of provisions across the income tax law, where the intent is noble when the proposals are introduced, but the trickle-down effect of those noble intention gets diluted at the field officer level. And in fact, in one of the cases in faceless assessments, we saw the Bombay High Court come down very heavily on the assessing officer and impose costs as well. So I don't know if that's also a way to go in terms of where you see principles of natural justice being violated or no grounds at all for reopening assessments, individual officers being held accountable for it. But that's sort of a topic for discussion at on another day. Parul, Karishma, Gauri, Yuri, many thanks for such a enriching and insightful conversation. I thoroughly enjoyed moderating this one, and hope our viewers equally found all of this useful for their purposes as well.
Thanks a lot, Payaswini, for moderating this for us. Thank you so much.
Thanks, Parul.
Thank you.
Bye.
And
Have a good day, everyone.
Thank you. Bye.
Bye.
Have a nice rest of the afternoon.
You too, Yuri. Thanks. Bye.
We are still, we also have our sunset. Bye.